Onto your markets now. Asian stocks traded mixed today while the Hong Kong and South Korean markets were closed for a holiday. Market participants are still keenly awaiting the US inflation data coming out later today to recalculate their estimates around when the next US Fed rate cut may take place. The Nikkei share average ended the day up 0.077%, while Hong Kong markets were on holiday, while over on mainland China, the Shanghai Composite Index declined by 0.8%. Over in the United States, markets were brisk yesterday, with the Nasdaq posting its seventh record close of 2024. Generally, the stock performance was strong ahead of the much-anticipated inflation data. US Fed Chair Jerome Powell has given some confidence to market players that the rate hiking cycle is over and done with, but has also indicated that it's been difficult to get inflation down to the central bank's target of 2%, and hence that number will be closely watched later today. The Dow Jones Industrial Average ended the day up 0.3%. The S&P 500 rose by 0.5%, while the tech-heavy Nasdaq closed up 0.8%, another record high for this year. Locally, the JSE is in the green today. It's up 0.7%. The Industrial 25 Index has added 0.4%, and financials are gaining by about 1.4%. Markets in Europe also trading higher. Britain's FTSE 100 is up 0.5%. The CAC 40 in France is 0.2% firmer, while the German DAX has gained 0.3%. Gold is trading at around $2,370 and platinum at $1,046 per ounce, while the price of Brent crude oil is at $82.58 a barrel. The rand is trading at 18.40 against the US dollar, 23.20 against the British pound, and 19.92 against the euro. Well, to break down the markets for us, I'm joined by Zwelakhe Mnguni. He's the CIO, the Chief Investment Officer at Benguela Global Fund Managers. Thanks very much for joining us, Zwelakhe. So, market players are eagerly anticipating that CPI number later today. What's your expectation, and what's your current reading of the market and how it's doing?
Yeah, thank you, Nompu. I think we definitely would expect that there will be an upward pressure on the US CPI. I think the data we saw from the PPI was also marginally higher than what markets were expecting. I think it came through at 0.5% versus 0.3% that was expected. So I do think that there will be an upward pressure, but I don't think we will see a runaway inflation. So I still think that we're still in for maybe rate cuts towards the end of the year. I think the timing of it could be delayed a bit, but certainly it looks like there might be a cut later.
The reality is that for SABC, our viewers are South Africans, and they want to know how this impacts them. So from your perspective, how soon do you think our Reserve Bank will then be cutting rates? Do they ultimately have to wait for the Fed to move first?
I don't think it's almost like that synchronized, but I think they do need to pay attention to the fact that, I mean, a lot of our inflation is imported through the crude oil and the rand. And I think what you need is to see a meaningful pullback in the oil price in dollar terms, but also a strengthening of the rand. And I think currently we have that, but the question is it sustainable? I mean, I don't think so. I think we might go sideways until the elections have gone past. So yeah. I don't think we'll see rate cuts in South Africa this year, maybe. I'm not convinced.
Let's see. So we learned yesterday that the US has effected very heavy import tariffs on Chinese goods like electric vehicles and semiconductors. Can we expect that tit-for-tat sort of trade war scenario that we saw during the Trump era?
I doubt it would be a trade war kind of scenario. I think China would be actually stupid to play in that game. But I think what it does is that it is actually inflationary for the US because China has the ability to produce some of these goods at a much lower price and then export them to other markets. And therefore, by blocking those things through tariffs, essentially the locally produced items might be more expensive, so semiconductors and electric vehicles. On the other hand, China might look to the other markets to basically export their product because Even the EU has been talking about China having excess production in sectors like electric vehicles, and they flood in the market. So there seems to be a lot of resistance in some markets. But what they could do is they could lower the prices and maybe drop those products in other markets.
So yesterday, Anglo American, they announced that it's going to spin off its interest in Anglo Platinum and diamond maker De Beers. What are the implications for these companies, and specifically for shareholders who have a little bit of meat and sauce in those counters?
Yeah, certainly if they implement the plan accordingly, I think there will be likely an overhang on the South African assets. So both De Beers and Anglo Platinum, you're likely to see that the foreign investors will probably dump those shares as soon as De Beers is listed and as soon as Amplats is demerged. So that will create like a bit of pressure on the price. And I think we did see the reaction of Amplats yesterday, that it was down quite a lot. There is a bit of a bounce on the platinum sector today, but certainly there was a bit of pressure. So yes, the BHP transaction is set cat amongst pigeons, in that the complacency that we saw in the past at Anglo American seems to be fading away fairly quickly.
I think that there's a lot more to be discussed around that particular story, but we don't have time. My last question really pertains to what everyone is looking forward to come 2 o'clock. Well, some people are not looking forward to it, and that is the signing of the NHI bill into law. What have you been seeing in terms of the health counters? We know that Discovery lost quite a bit on its stock yesterday, something to the tune of about 10%. What are you seeing today? Have they recovered these counters?
Not fully. So I think Discovery is probably up 1.5%. But I think the big thing about the reaction from yesterday is that if you look at some of the clauses in the NHI, it says once the NHI is fully implemented, the medical schemes wouldn't be able to provide cover on the services that are covered by the NHI. So it basically would shrink the market for the likes of Discovery. And that is a risk that I think the market was reacting to yesterday. I think we'll probably have to live with that for a while. But I think the saving grace or the silver lining is that NHI implementation will take a very long time. It's unlikely that we could see it materializing in full in the next 5 years. So it's going to be staged as we go along.
All right, Zwelakhe, thank you very much for your time there and your insights. Zwelakhe Mnguni, he's the CIO of Benguela Global Managers.